Hey guys, welcome back to the TradeFX YouTube channel. My name is Josh, aka the Homie Fletcher, founder and owner of the TradeFX YouTube and Discord community, and also the Telegram community as well. And what we're gonna discuss today is earning money trading Forex. Okay, and this would sort of appeal to the newcomers, the beginners in trading, because if you establish a working trading strategy, now the next step towards becoming profitable is of course getting capital, and getting capital is probably the hardest or one of the hardest steps that it takes in order to become a successful trader and actually seeing real returns from it. So there are two ways that you can get capital, which is by funding your own live trading account or by taking funded challenges. And we're going to discuss how I believe that taking funded challenges is probably one of the better route to go down, as it provides and also lessons on the psychological impact that trading may affect or may have on you when it comes to risking your own capital when you're trading the financial markets. Okay, so we're talking about earning when you trade, and a big part for traders when it comes to their trading is those gains. Everybody trades Forex. They want to start trading Forex, or they got into trading Forex because they see the lavish lifestyle, whether it's from social media platforms, TikTok, Instagram, or whatever the case may be, even YouTube. They see these people showing or flaunting the type of lifestyle that you can get from trading Forex, right? Which isn't a bad thing necessarily, and it is very possible to do so. However, there is a catch, and there is sort of a path that you have to go down in order to achieve that. It doesn't just happen overnight. There are different steps that you have to take and procure certain routes in order to reach to that level, or to that potential that you can possibly get to. Now that involves getting the capital when you're trading. A lot of people, the newcomers, those would have been trading back in 2015 and such, before we had prop firms. The only way to start trading was funding your own live account, and this would involve getting a broker from online and putting money, your own money, and investing it in that broker and start trading it on the financial market. Now there's two downsides to actually doing this. One, the hassle. I'm just going to type it out. One, the downsides of funding your own trading. The hassles involved in trading your own capital. And what do I mean by the hassle involved trading your own capital? Well, the thing is, depending on where you are, if you're outside of the US, then brokerage or getting brokers in order to support you when it comes to investing your money with them, it can be sort of a more challenging, more difficult, just because when you are outside the US, there are certain things that you need to watch out for, whether the broker is trusted or not. They're A-book or B-book brokers, and if they can be trusted with your capital, meaning they don't just run off with your capital whenever they feel like this isn't any more beneficial for them. And that is something that a lot of times a lot of new traders, especially back in 2015 coming up, would have to go through here and there, because there was no real way in order to certify that these brokerage were in fact regulated and can be trusted, right? There are a number of brokers that do come out that aren't regulated, and they have their reasons for that, as you may see stipulated in some of their policies. However, that does not deter from the fact that these brokers cannot be trusted long term, as they can run off with your money, right? So you want to make sure that the broker that you do pick is trusted and regulated, and A-book, meaning that the capital you invest and the liquidity provided by those brokers are going directly and from the market itself, and not through some third-party usage, right? So that is something that you want to be sure about. And especially for us here in the Caribbean, it's more of a hassle, especially when you're dealing with getting a credit card or along those lines. If you're somebody that just fresh out of college, fresh out of high school, and you want to get into this in your teenage years, then becoming funded through a brokerage is a lot more difficult, especially when you have to look to get those credit cards, Visa credit cards, debit cards, or whatever the case may be, and banking in the Caribbean itself. There is a lot of hassles and a lot of loopholes that you have to jump through in order to achieve this. Secondly, as well, the psychological impact that trading your own capital has on you, right? So this is something you want to actually note as well. Whether you're a person, if you're able to trade, let's just note it here. Secondly, the psychological impact. Okay, so this may not necessarily involve you yourself, but it depends on the person, because when it comes to trading capital, your own money, there's sort of a risk involved to your psychology, because you start thinking about, okay, what if this doesn't work out? What if I enter a trade and the trade starts going against me? What then? You'll exit the trade in that drawdown, right, where the trade may continue going in a direction where you previously thought it would have gone into. And sometimes in trading, you have to be comfortable with running into drawdown. You have to be comfortable seeing your trade in the red before it starts going in profit. A lot of times when we are trading, depending on the broker that you are using, the asking and bidding prices are very different. So when you enter a trade, usually at the beginning, it may start off in red, in the negative, right? And this is something that's common in trading, especially when you have brokers with high spreads. This is something that you'll often run into. Now, psychologically, that can impact you because you're using your own hard-earned money, what you could have used for something else, let's say groceries or paying your electric bills or something like that. And because of that psychological barrier, that's thought that you have in your mind, when you see your trade starting going in the red, you're up to either come out of the trade early before the trade starts going in your direction, or you allow the trade to run because you really need this to work for you. So you keep on widening your stop loss, and your trade continues going down, and you end up losing your whole account. This is something that a lot of new traders run into, that psychological barrier that they have set up when it comes to becoming funded and using their own capital, right? So this is something that you need to pay attention to as well in terms of your own psychology, and discipline. Whether you have a working trading strategy for you, obviously that trading strategy won't work 100% of the time, but if you stick with it, the good will outweigh the bad. You'll have more good trades than losers, and therefore overall you would be profitable. But running into those drawdowns, especially if you're running into it one after the next, would heavily impact your psychology. So that is something that a lot of traders run into when they are risking their own money in trading. Okay, so these are the two downsides when it comes to trading, and we'll also talk about the upsides when it comes to investing your own capital. But now I want to move on to becoming a funded trader. So now let's talk about prop firms, all right, and getting funded with the prop firms. Now, over the years, there have been multiple prop firms that came out, and what they do is they fund those that are able to make money from trading forex. Now, if you have a demo account and you have a working strategy, then you do have a potential way to make money from trading. And these prop firms know that, and they know that a lot of people who are able to trade, they run into the issues of not having capital to start their trading career at the rate at what they want to do. So these prop firms, they basically say, hey, if you're able to trade and show that you have a winning strategy in order to profitably and consistently profit from the market, we'll fund you, we'll give you our capital to trade. And I just want to look at a couple of trading prop firms that do exist, and I think that you would really like. Okay, so one, and we're going to look at the price difference between these. So the first one here is FTMO. Now FTMO is one of the more well-known companies out there that help traders with their trading, provided educational videos, as well as giving 90% of profits and covering the losses, right? So whenever you trade, the amount of profits you make, you gain up to 90% of that. All right, And we're just going to look at some of the pricing. As you can see, they do have a number of traders registered all over the world from 180 different countries, 6 million plus of trades opened every month, and 8 hours average payout processing time, which is like very well. That's very well. As well as 70 million plus paid out to traders. So they do have a lot of evidence showing that they are a trusted prop firm company out there that allow traders to trade on their platform and gain profits from them with almost minimal drawdown, really quick profit splits, and so forth. Now the thing to watch now is how much does this cost, right? And that's the thing. So when you are looking to become funded as a trader, you have to do a series of challenges, and all prop firms basically have the same sort of scheme when it comes to their challenges, right? So you have a trading period for the first part of challenge of 30 days with a minimum trading days of 10 days, and with max drawdown for that day being 500 or 5% of whatever account size you are using. In this example, we are using the 10K account. So 5% of that 10,000 is $500. So this is your max daily loss. That means at any given moment of the day, if you surpass this maximum daily drawdown, then you violate the account and no longer are eligible to become a trader with the company, at least to continue the trading challenge that you purchased, right? And we had a maximum loss of 10% of the account, in this case $1,000. Right, and the profit target here is 10%. Other prop firms have lessened this profit target to being around 8% or 6%. Usually you'll see 8%, and there's a refundable fee. So once you do pass the 2 parts of this challenge and you do make your first withdrawal, you will get back the amount you paid initially to do that challenge, right? And on the second step, after you pass and complete the first one, you have 60 days, so double the amount of the first challenge, right? You have 10 days minimum to complete it. Maximum drawdown, maximum daily drawdown of 5% of the account, 500 in this case. Max loss of 1,000, 10%, and the profit target is now halved to being $500. So usually you will think that the second part of the challenge would be the easiest part, but we'll discuss why it really isn't, right? But as you can see, you have more days to complete the second part, so you can take your time and achieve that 5% gain, and then you will get the funded challenge account. You'll get the actual account where you will start being able to make money, right? We also have my FOREX fund. Looking at the 10K account, same example. We have the max daily drawdown being 5% of the account, 500, and overall drawdown of being 12%. So you can see that the overall drawdown, they give you a lot more room, right, in order to do your trading when it comes to the overall drawdown. So you have an overall drawdown, 2% more of that of FTMO, and a refundable fee of $84. So to start this challenge, you'll have to pay 84 USD to do it. FTMO is 155 euros, which calculates to around 170 US dollar, a lot higher than this, almost double times it, right? Then we have another one that I use personally called Traders Eco. There was Trading Central, sorry. They were Trading Central, but they now changed their platform into Traders Eco. And basically for this challenge, you do have, it does come up to a sum total of $67, sorry. Around $80 is the normal USD pricing, but they do have a discount right now for it being around $68, right? So this is the challenge you have for the first period, 30 days to complete it, a profit target of 8%, and that drawdown limit being 10% overall, minimum trading days being 10 days, right? On the second stage, you have twice as much days to complete it, as well as the profit target being halved down to 4%, with the drawdown limit being 10% and minimum 10 trading days. Okay, and you can see that the profit split here is 85%. So whatever you make, let's say you make $100, you get $850, which is, sorry, let's say you make $1,000, sorry, On this account, 10% of the account, you get 85%, which is $850, right? So a very fair amount of profits would be given back to you. Now, what does these prop firms do? How would it help you as a trader? Well, for one, it lessens the strain when it comes to using your own capital. That is to say that overall, what it does is lessens the psychological effect that trading does have when you see your trades in drawdown, as well as the overall amount of money that you have to invest in your own trading, right? Because let's say you're able to pass this challenge. Let's say you pass the challenge and you get 10K funding. You get a 10K account, right? Basically, you get $10,000, right? Now, overall, you do have a max drawdown being 10%. And that daily drawdown being 5%. Now, if you do have a working trading strategy for you, then this really doesn't matter, and you could gradually grow the account. Now, let's say each trade that you do take, you risk around $50 per trade, meaning 0.5% of the account per trade, and out of that you make a 3% return, basically being 1.5%. So let's say you make 1.5% in terms of returns for your first week, which is equivalent to 150 USD, right? Not much to begin with, but it's still something, and you can scale with that. Now, when you make that 150 USD, you now reduce the risk on your account overall, and you can continue doing the scaling by implementing the same sort of risk management strategy where you risk 0.5% of the account and gradually grow a buffer zone, thereby even lessening the risk more when it comes to risking your own capital or that psychological impact that it may have on you. So you continue doing this and gradually create a buffer. So you can create a buffer, no risk is brought to the account, right? And that is something that I think a lot of people would appreciate when it comes to trading these prop firms, right? So this is something that you can take into consideration when you do a funded challenge, and if you do end up passing the funded challenge, you can create a buffer zone, risking minimal on the account, and gradually you can start trading with normal risk and grow this account overall, right? Compared to when you're using your own capital. Let's say you start with $1,000, right? Or let's say you have it like that, right? Let's say you do have enough capital. You start with a 10K account. You start with $10,000 of your own money, right? So you start $10,000 of your own money. Now the thing is, when you do have your own account, you are less likely to stick to your rules, right? Because you don't have the prop firms telling you basically, okay, you have to do this, you have to stay within a certain drawdown limit or anything like that. So in terms of having your own account of 10,000 USD, right, your max daily drawdown is indefinite, it's unknown, it's ending, right? Your daily drawdown as well, your daily drawdown is also unknown, because you don't have these funded companies. You don't have them telling you, okay, you're only able to risk this amount, X amount per day or anything like that. So when it comes to trading and the psychological impact of trading, right, if you do run into a drawdown, you do run into a scenario where you experience back-to-back losses, what you're gonna do now is risk more on that next trade that you do take. So on that second trade setup that you do take, you end up risking more, and what happens, more than likely you end up losing more, right? So let's say the first trade that you take, you end up with a negative 100 USD, plus you re-enter another trade and you risk double the amount, so you end up with negative 200 USD, right? So overall, your account balance is now down negative 3%, or $300. You're now down negative 300 USD, Okay, and this is something that a lot of people new to trading would be familiar with, because it is something that you run into when you know you shouldn't be trading. Revenge trading, you allow your emotions to take over, and it is something that a lot of people get caught up into. Vice versa, if you are trading with a funded account, you're less likely to do so, because you know for a fact that if you do, then you run the risk of losing your account in that day, right? So when it comes to trading the funded account, if you do lose 100 USD, you do enter a trade and you lose with 100 USD, you may re-enter a next trade, but you won't double the risk. You're more likely to lower the risk to being around, half of the initial risk, and that total will end up with a negative 1.5% or negative 150 USD. So this is the thing about becoming funded, right? And having a funded account, it allows you to discipline yourself even more, or stick to your rules and strategies that you set for yourself. Even if you do end up going into some sort of revenge mode because you lost a previous trade, you're less likely to make the same exact mistake if you are trading with your own capital, because you have these rules that you have to stick within. Remember, you want to grow and continue growing the account, especially when you have the ability to scale these accounts into getting more capital from the company. Now, this is risk-free money, right? This is money given to you by the company in order to trade. So why would you over-risk it when you could just stay out of the trade and wait for another setup that aligns with your trading strategy? You're less likely to do so than if you are given your own, or if you are using your own capital where nobody's pressuring you, nobody's telling you that you have to stay within a certain rules or certain limits, right? And that's the thing. So by these prop firms actually showing or telling you that you need to stick within these sort of restrictions that they do have on the accounts, especially when it comes to the daily and maximum daily drawdown, it helps you discipline yourself as a trader, and overall that is more beneficial for you in the long run. Now, it may affect the profits that you're able to make sometimes, not necessarily, not all the time, but sometimes it may do that. However, you are now more focused on getting better setups rather than the amount of money you're able to make overall, and those better setups would lead into better trades, which would lead into better or more money being made on the account. So that's one of the biggest, I think, rewards when it comes to trading with a prop firm. In terms of the prop firms that I do recommend, if you're somebody that's fresh out of college, you don't have a lot of money to invest, right, and you just want to start trading, and you just came out from college or from high school or whatever the case may be, then capital is something that may be hard for you to come by. The best prop firm that I do recommend for those that do have those sort of situations is is Traders Central, now known as Traders Eco, right? So you could go to their site, traderseco.com, and you can see the challenges that they do offer are quite less inexpensive than, for example, my FOREX fund, which is still on the lower side, more budget-friendly side than FTMO, which is around 155 euros or 170 USD, right? So you could get potentially 2 10k accounts from that, or 2 10k challenges on my FOREX fund from that, as well as even more from from Traders Eco, right? So yeah, I believe Traders Eco is better in terms of being more budget friendly, especially for the beginners that are or may be suffering with a lack of funds as it is in order to become funded, right? And you do get a lot more out of the amount of money that you will pay for FTMO challenge in Traders Central, Traders Eco, and my FOREX fund, right? So that's just something to take note as well. So there are upsides and downsides to both. The one being, trading with your own money does allow more freedom. You're able to put in more risk, and again, you could also gain more capital. But you also run into the possible fact that if you aren't disciplined, because you don't have those restrictions on you, then you're able to run into drawdown even quicker, or end up in situations where your judgment is clouded by your emotion, and that ends up playing against you, right? So one big factor as well when it comes to trading your own capital is there's nobody, right? Nobody is there to keep you in check, right? So nobody is there to keep you in check. Whereas for the prop firms, these rules keep you in check. Those this daily drawdown being a 5% and the max daily drawdown being 10%, it makes you focus on taking the best possible setups that you do see for yourself, as well as sticking within those rules, meaning you're less likely to run into situations where you allow your anger or your emotions to cloud your judgment, your better judgment, when it comes to revenge trading or anything like that. So basically, these prop firms are working, like they're working to help you, they're working towards helping you. So because of that, those rules in place, it allows you, right, the prop firms keep you in check. And this really is what you want to be able to do, right? You want to be in control of your emotions. You don't want that to dictate the trades that you do take. You don't want it to be from an aggressive standpoint. You don't want it to be from an emotional standpoint when you do run into drawdown or back-to-back losses or anything like that. You want to be able to keep those emotions in check and look for the next possible play or the better setups that would come in timing, right? So the prop firms allows you to practice patience, as well as looking for the better possible trade setups that would help you in the long term or long run, right? And that's just from my standpoint, what I've seen trading with prop firms. That's helped me, that's guided me in order to becoming a better trader, especially when it comes to involving emotions and the psychology of trading. Again, the psychology, it allows you to take out that sort of mental taxing thought that you're trading your own capital, so you need to make money, on this, because if you lose $100, then you're like, wow, I could have used that $100 to buy groceries for the week or something like that. I could have used that for something else, but now I'm just here risking it, trading forex, and I'm not making anything of it. And forex is a scam now. Forex is just bad. You shouldn't trade forex. Forex is just and those kind of thoughts start invading your mind and overall affect your trading psychology and how much you're able to do when you're trading your own capital. Vice versa, when you are trading with the prop firms, you put those initial risks from doing the challenges. Once you pass the challenges, right, then the risk involved now is just keeping the account. So you start off slow and steady, build up the account, build that buffer zone, and now you're able to trade on a regular, normal basis how you would before, and just continue building the account. And because this is now risk-free, and after you make that first profit withdrawal, this money is risk-free money. It's not money that's that you could have put towards doing something else, because you already made back the money that you initially put into. So this is just all risk-free money. It's money that's there for you to use how you like and to make profits on the market with zero risk to yourself. And that's the nice thing about prop firms that a lot of people just take for granted, right? So yeah, earning money in forex really does come to how much capital you do have access to, and that capital access would affect your overall trading journey, especially when you do have a working strategy for yourself. The next step is making the money from the trading, right? And that's what a lot of people want. They want to start making the money. And to do that, I do believe that prop firms do have a lot more good than trading with your own capital, and they do help you in the long term, especially when dealing with the psychological factor involved, right? So that's it for this video, guys. Hope you loved it, hope you enjoyed it. If you got some useful information out of this, then feel free to leave a like and a comment. Let me know what else you want to see. And I'll be doing these part series. I'll be doing series where I talk about different ways you can get funded, what you could do in order to increase your trading profitability, as well as things you could put in place in order to, you know, make your overall experience a lot more better than when I started out trading for myself. I ran into a lot of issues, especially since I'm not in the US, I'm from the Caribbean. So I ran into getting a broker, funding my brokerage account, and a lot of different things, right? So if I could help you in any way at all, then I would be really glad to do so. So thank you for joining in, guys. Hope you found this video interesting and informative, and see you in the next one. Peace.